Hello, my name is Nicole, and this video is about how I pick stocks for options trading. The difference between profitable options trading and losing money often comes down to one thing: stock selection. There are specific characteristics that make certain stocks suitable for leaps and covered calls, and I'll show you exactly what I look for. So stick around because this could change how you approach options trading. If you've been trading for a while, you know that stock selection is everything. You can have the perfect strategy, but if you pick the wrong underlying, you're fighting an uphill battle. Today, I'm breaking down exactly how I screen for stocks that work well with two of my favorite strategies: stock replacement using leaps and poor man's covered calls. So let's dive in. First, let's start with objectives. I want to identify high-quality stocks for trading and investing that will increase my probability of realizing profits. I want to focus on capital efficiency and long-term growth, and I want to select stocks that are suitable for call writing and replacement strategies. The first part of my stock selection criteria is the Peter Lynch principle. Peter Lynch, the legendary fund manager, had a simple philosophy: invest in what you know and can't live without. I ask myself, what companies do I interact with regularly, and could I imagine my life without their product or service? I think about companies like Apple, Amazon, Google, Netflix, Visa, Uber for some of you, CME and CBOE for us options traders. These aren't just stocks, they're woven into our daily lives. When trading and investing, you want companies that are well known with durable business models that aren't going anywhere. Next, I focus on growth and fundamentals. I want to prioritize companies with consistent earnings and revenue growth of 3 to 5 plus years, high return on equity and profit margins, strong free cash flow, reasonable debt levels, and clear competitive advantage. I want growth companies, but not growth at any cost. So AI is changing how I do fundamental analysis for the stocks that I want to trade. I use ChatGPT to begin my fundamental analysis for the stocks I'm interested in. And I want to jump in here and show you how I begin inputting information to ChatGPT so it can help me with the fundamentals. And I often will get the initial data from ChatGPT, but I will always cross-check that just because AI is new and it's not always super accurate, but it can always give you kind of a good starting place when doing fundamental analysis. I want to show you the input that I put into ChatGPT. And you can see here, I'm saying I need to do some fundamental analysis for the following companies: Apple, Amazon, Google, Visa, Waste Management, CBOE, CME, Uber, and Hood. And I'm putting in the criteria that we just went through so that it can give me information on exactly what I'm looking for. So here it spits out the fundamental analysis summary for the companies that I listed according to the fundamentals that I'm interested in. And you can see here, there's the information for Apple, Visa, Google, and Amazon. And those are top tier companies. And the mid-tier companies include CME, CBOE, Waste Management. And the still developing or riskier profiles of that list include Uber and Robinhood. So something that used to take a very long time to do now takes merely minutes. So pretty amazing. It's important to keep up with the advancements in AI because it can really help with productivity. And there it kicks out a summary table with a quick ranking based on my criteria. So pretty impressive. The next thing I'm looking for is institutional ownership. And I really want that institutional love. When a large percentage of a company is held by institutional investors, which include professional money managers, pension funds, mutual funds, etc., that tells me that smart money believes in this company's future. Institutions buy and hold quality companies, which creates underlying stability, exactly what we want for longer-term option strategies. In addition, institutional ownership often means better analyst coverage and more predictable price movements. So I'm going to hop back into ChatGPT here and ask it to give me some information about the institutional ownership for each of these companies. And here we can see the results pouring in. You can see here that many of these names have high institutional ownership, and it gives the actual institutional ownership for each company as well as comments related to the ownership. And we can scroll down, and it looks like the majority of the stocks on the list that I'm interested in do have sufficient institutional ownership. And here we can see that the AI software does provide some key takeaways in a summary here. The next variable that's very important to me is liquidity. Liquidity is king. This is particularly true for options traders. I need liquid stocks with robust options markets. So what am I looking for? Well, average daily volume that's well over 1 million shares. I need tight bid-ask spreads for both the stock and the options, and active options trading across multiple strike prices and expirations. Illiquid options are profit killers. I like to focus on trading liquid options so that I don't get stuck in something that I can't exit at a reasonable price when I need to. And for those of you who have any kind of experience in trading options, you've probably experienced what that's like, getting caught in illiquid markets, and you've probably learned your lesson. So let's hop back into ChatGPT here and ask it to give us some information about the options markets for these individual companies. And here it spits out the information that I asked for. And it gives me a list of top tier liquidity companies that are excellent for options trading. That includes Apple, Amazon, Google, Visa, and Uber, with Visa and Uber coming in at the bottom. And that's not too surprising. And then it gives us a list of the mid-tier liquidity companies: Waste Management, CME Group, and CBOE. And then it says that Robinhood is a lower liquidity company. And that doesn't necessarily jive with recent experience. So that's something that we're going to probably cross-check as we continue with our analysis. And here it gives us a wonderful summary table regarding liquidity. Let's hop into the Thinkorswim trading platform here to cross-check some of the information that we got regarding liquidity with ChatGPT. And we'll begin by taking a look at Apple, which is one of the most liquid securities in the market. And we're going to begin by taking a look at the August 1st, 2025 expiration date. These options expire in 8 days. And we're going to look at the volume and open interest for the different strike prices in this expiration for both the calls and the puts. And then we're also going to take a look at the bid-ask spreads throughout the strike prices. And what we're going to notice here is volume and open interest is very high throughout the strike prices listed on both the call side and the put side, and the bid-ask spreads are fairly narrow. Now let's take a look at some other options expirations just to see what those look like. And if we go to the August 15th, 2025 expiration cycle, we're going to see that there is a tremendous amount of open interest pretty much throughout the strike prices listed on both the calls and the puts. And there's quite a bit of volume for each strike price as well. So that would be an example of a very liquid options market. Let's take a look at the September 19th, 2025 expiration. These options expire in 57 days. And once again, we're going to notice a lot of open interest and volume for both the calls and the puts. Now, I always like to take a look at the further dated expiration cycles just to make sure that there's sufficient volume and open interest there if I'm interested in trading stock replacement strategies with leaps. And going out to the December 17, 2027 expiration cycle, there's quite a bit of open interest, and the bid-ask spreads for at least the at-the-money calls are very tight. And you can see here that there's quite a bit of open interest on the put side as well. And let's open up the January 15, 2027 expiration cycle. These options expire in 540 days. And there's more liquidity in this expiry compared to the previous one we just looked at. And you can see here plenty of open interest on both the calls and puts at the various strike prices, and an okay amount of volume there. Now let's take a look at Hood just to compare, since ChatGPT thought that Hood was questionable. And looking out to the August 1st, 2025 expiry, these options expire in 8 days. And of course, there's not the liquidity that there is in Apple, but the bid-ask spreads are fairly tight, about 15 cents wide for at-the-money call options. And there is quite a bit of open interest and sufficient volume in the weeklies. And let's open up the August 15, 2025 expiration cycle with 22 days left until expiry. And we're going to notice quite a bit of open interest there as well. Again, tight bid-ask spreads, 5 to 10 cent wide bid-ask spreads for the at-the-money call options. Whoops. And you can see here quite a bit of open interest and volume. Now let's go out to the leaps and see what that looks like. And going out to the furthest dated leaps, the December 17, 2027 expiry, we can see that there's quite a bit of open interest there and volume isn't quite as robust, but it's not terrible. And when we look at the January 15th, 2027 expiration cycle, again, quite a bit of open interest throughout the calls, less so on the puts, but the bid-ask spreads for the leaps there isn't too bad. So this is an example where I would have to disagree with ChatGPT when cross-checking the information, and I would think that trading hood would be okay. Now let's take a look at waste management, just for comparison's sake here. Now this company doesn't offer weeklies, so let's open up the August 15th, 2025 expiration cycle, and you can see here there's hardly any open interest and basically no volume. So this would be options market that I would stay away from. And there you can see that's reflected in the wide bid-ask spreads there. And then finally, let's take a look at CBOE. So this stock does have weeklies, but as you can see, the volume in open interest is pretty terrible. So very illiquid. And if we go out to the August 15th expiry, it doesn't get much better. So hardly any volume and very little open interest. And then just going out to take a look at the leaps, again, hardly any open interest there, and you can see wide bid-ask spreads. So the CBOE would not be a good candidate for stock replacement or the poor man's covered call strategy. And finally, before I decide whether or not I'm going to trade an underline, I do take a peek at the technicals. Now, I'm not a pure technical trader by any means, but I want to see stock that's in a general uptrend or at least showing relative strength. And I will sometimes consider fire sale opportunities in stocks that I believe are temporarily oversold with intact fundamentals. And these opportunities oftentimes present themselves during broader market selling events that are generally tied to geopolitics or macroeconomic factors. And that's when market participants sometimes will throw the baby out with the bathwater, and you can really pick up on some good deals if you're able to in your portfolio. There are some additional considerations that I make when deciding on what underlyings to trade or invest in. The first is dividends. I will often avoid stocks that pay dividends regularly if I plan to sell call premium, as is in the case of the poor man's covered call. This is because dividend stocks pose a risk of early call assignment near ex-dividend dates, and it's something that I find difficult to keep track of. Exceptions can be made if writing out-of-the-money calls or using tight management, but I find that these stocks are generally better suited for long-term holdings than options overlay strategies. Next is sector diversification. That's always important in portfolio management. And volatility. Low to moderate volatility is preferred. High levels of volatility can lead to expensive option premiums and challenges with position management. Before we end this conversation, I do want to touch on indexing. This is the foundation of my entire approach. Index ETFs like SPY and QQQ. These are actually my core holdings, and here's why they're perfect for option strategies. First, instant diversification. SPY gives me exposure to the top 500 US companies, and QQQ gives me the top tech companies. I'm essentially buying the broad market's success. Next is unbeatable liquidity. SPY trades over 100 million shares daily with penny-wide spreads. The options market is incredibly active with tight spreads across all strikes and expirations. Next, built-in fundamental strength. These indexes automatically include the most profitable growing companies in America. When companies fall out of favor, they get dropped from the index. It's basically like having a team of analysts constantly updating your portfolio. Next is long-term upward bias. Over time, the U.S. economy grows, companies become more profitable, and indices trade higher. This gives me confidence when holding leaps for stock replacement. And finally, lower single stock risk. With individual stocks, one bad earnings report or scandal can absolutely torpedo your position. With index ETFs, individual company problems can get diluted across hundreds of holdings. So my typical investment allocation is to be notionally long approximately 60 to 70% of my allocated growth-oriented investment capital in index ETFs like SPY and QQQ, with the remaining 30 to 40% in carefully selected individual stocks and alternatives like Bitcoin. This notional exposure comes from a mix of actual shares, stock replacement using leaps, and other options overlays. It's important to diversify not just by asset, but by strategy as well. And I want to emphasize that this is not investment advice. I'm just simply sharing with you my approach. If this approach resonates with you, please like, share, and subscribe. Drop a comment below with your favorite stock and see if it passes all the criteria. As always, thanks for listening and be awesome.